Hello guys, so in trading there are a few things which might affect you either technically or psychologically. Eventually they limit the possibility of you achieving any success in the market. So today I'll be sharing with you top 6 signs that you will most likely fail in your trading and how you can fix that. So the first sign is you don't collect data. Any trader who doesn't collect data is very likely to fail in the markets. There are two types of data collection in trading. The first one is backtesting the past market, and the second one is journaling your current trades, the ones you are taking on a daily basis. Backtesting the past market data will assist you to gain confidence in the market. It will assist you to adjust anything in your strategy and develop a solid and working plan. If you don't collect any data, you remain to be doing trial and error in the market. The second type of data collection, which is journaling your current trades, will assist you to know if there is anything you are doing wrong in your trading. Are you having any problems in your execution? Have you been missing good trades, and why have you been doing those mistakes repetitively? In my own opinion, backtesting alone will solve about 50 to 60% of your trading psychology problems. Same thing with journaling. If you journal consistently for about 3, 5, 6 months and you're intentional about knowing what you're doing wrong in your trading as you work to improve it, it will also boost your confidence solving another part of your psychology. So if there's nothing you are doing to collect data in the markets, you are definitely setting yourself up for failure in the long run. The second sign you'll fail in trading is a capital problem. And by this, I mean you are trading with very small accounts. Now, this is from a very long-term perspective. If let's say you have a $100 account or a $200 account, you'll find that you have a lot of pressure to flip the account so that you can make some significant profits. But if you have large capital, let's say $100,000, it eases the burden for you in the market. So a small account will result to more pressure in the markets and eventually bad trading habits. You'll be trying to take setups every time because you want to make money consistently. In the process, you end up executing wrong trades. When you have a big account, you have less pressure. Think of this, you have a $200,000 account, and for a 2-month period, you average about, let's say, 5%. So for the 2 months combined, you've done 10%, which is $20,000 in profit. Assuming the next month, which is the 3rd month in a row, you end up having a break-even month, where for a whole 30-day period, you don't return anything in the market. You'll not be disturbed because in the last 2 months, you had done about $20,000. Now, you can't say the same for someone who's having a $100 or a $1,000 account. You go for 1 month without making profit and you have a lot of pressure to clear bills, and eventually you end up making bad trading decisions. So at some point in your trading journey, you need to primarily focus on building capital and having a plan where you're going to scale your trading accounts. The third sign you'll fail in trading, you are easily swayed by other traders' opinions. If you have different traders in the same room, you'll always find different opinions about different markets. And everyone might have a reason to tell you they want to go long or short in a certain market. So you can't let yourself be swayed by others' opinions. This is why it's important for you to collect data on your own. And in the process, you find what works for you and stick to it. For example, a scalper might be buying a certain market and a swing trader is selling the same market. Both of them could be right or wrong, you just never know. One of them is looking at the market from a long-term perspective, the other one from a short-term perspective. So the only thing that matters is, are you respecting your plan? Are you following a proven model? If that's the case, then people's opinions should never affect how you trade in the markets. So anytime you're following traders, even on social media, be sure to filter any information you get, including myself, and just stick to what works for you at the end of the day, depending with your data. Sign number 4 is you're trying so hard to be right in the markets every time. You need to make peace with the fact that losses are a part of trading. Make peace with the fact that you can't win every trade. In fact, the best traders are the ones who factor in risk management most of the time. They factor in the downside. They factor in the possibility of them taking the loss before they even take the trade. Then you let the upside or the profit side take care of itself. Ironically, most traders do the opposite. They take a setup just anticipating profit the whole time. And it's because they are trying to be very right based on the analysis. They want to hit that profit target so bad and secure that money. The truth is, most markets are random. However good your analysis looks, you won't always be right. There's a reason why a profitable system is a function of something we call an edge. It's called an edge because it's factored in both profits and losses. So the idea is that you will lose, you will win, but what matters is the net result is a positive. That means by the time you're executing, you should be very open for losses and don't try so hard to be right. And this is where risk to reward comes in comparison to win rate. You don't really need to be winning many trades. You just need to win a significant number of trades and have a reasonable risk to reward ratio. If you have a 1:2 risk to reward ratio, out of every 10 trades, you just need to be winning 5 of them. If you have a 1:3 out of 10 trades, you need to win about 3 or 4 and you'll still be profitable. So don't focus so much to being right. Instead, focus on taking high probability setups with a good risk to reward ratio. So before I continue, I want to quickly introduce you guys to our trading community. It's a place where you get very precise and refined educational material based on my trading style. And you also get to interact with other community members in our private chat, including myself. You drop any questions there, you share your analysis, any issues you're facing. And the goal is to build you into becoming a real long-term successful trader. We do have close to 30 videos broken down in 2 modules. In the first module, you get an idea of how I approach the markets as an individual. You basically get to understand how I trade and why I trade like that. Then in the second module, I've focused on now teaching you the exact criteria you can use to build your own edge in the markets. As a trader, the goal is to get to a place where you can be independent, trade on your own, build your own strategies, build your own systems. So here I've refined the exact step-by-step process, showing the details that you can use from scratch to build your own trading strategy. So that's not limited to whether you're a scalper, day trader. Regardless of your trading style, this information is very helpful to you. As we head into the new year, you really want to start with a solid plan in the markets. Don't waste another year doing trial and error. That's exactly what our community provides. If you want to find more information, head on to the website, links in the video description, and on the FAQs page, you'll get further details on every benefit you'll get by being a community member. Otherwise, let's get back into the video. Sign number 5 you'll fail in trading is you are very desperate to make money. Money desperation is a big enemy in terms of you finding trading success. Myself, one lesson I've learned in the market is depending with how comfortable you are financially or depending with how less financial stress and pressure you have, it can really affect how you approach the markets. This is why I don't recommend anyone to quit their job for trading unless you've been doing it for a couple of years and you've secured a lot of capital and you're consistently profitable and you're very secure financially. But just quitting your job because you had 1 or 2 nice months is never a nice thing. You'll have a couple of months where you're not making money. You'll have a couple of months where you are actually finishing in the negatives. And if you're depending on trading to pay your bills on a monthly basis, that will not be good for you, even psychologically. When you're desperate to make money, you come to the markets with unrealistic expectations, number 1. Number 2, you become very impatient. That's why you meet traders out there within 1 or 2 months, they're already trying to make a lot of money. You'll find yourself over leveraging and over risking most of the time. And all of these are poor trading habits. So my recommendation is before your trading stabilizes, don't quit your job. And if you don't have one, you might actually want to look for a side hustle. Have something else that you do on the side which sorts your bills, which eases your pressure. I really don't recommend you sitting in the house from January to December. You're not yet profitable and you're just there trying to learn trading in the hope that at some point you start making money. Yes, it can work, but you are reducing the odds because of the kind of pressure you are giving yourself. Let's face it, being profitable takes time. Mastering some of the concepts in the market in terms of technical analysis takes time. Understanding your emotions, understanding yourself in the markets will take time that we can't even say whether it's 2 months, 6 months, 1 year. It will vary from individual to individual. So you see, if you're desperate to make money and you're giving yourself timelines, already you are working against the principles that build a successful trader. The last sign you will fail in your trading is you are very fixed-minded, you are not adaptable in the markets. The market conditions change from time to time, and as a trader, you need to be adaptable. You should be in a position to study your markets, spot whether there is any unique behavior, and if there is need to adapt your trading style or your trading approach. 2 years since I started YouTube, I think I've shared to you guys about 3 trading strategies. There's a time when I was discretionary in my trading with pure price action. There's a time I've focused on demand and supply. And so far in the past 1 year, I've been focused a lot on support resistance. And the interesting thing is I've been profitable throughout these journeys. I've even documented it, showing some of the prop firms I was trading using a different strategy last year. So what that tells you is I've been adapting in the markets. Sometimes you might outgrow a strategy. Sometimes you might outgrow a certain trading style. And you just feel like you want to change and adapt to something faster, something new, or even something slower, depending on your trading personality. So you should be in a position to adapt in the markets, be a constant student, so that if the conditions change or if your personality changes, you can still find something that works for you. So I believe those 6 things, if you focus on them and make sure you're on the good side, you definitely will increase the odds of you becoming a successful and profitable trader. So take your time to fix them. Make sure you do a lot of back testing and journaling. Create a plan to build your trading capital. Stick to what works for you and don't be focused on other traders' opinions. Don't try to be right all the time. Don't focus on a high win rate every other time. Instead, try to balance it off by using a reasonable risk to reward ratio. Number 5, don't be desperate to make money. Have another source of income which will ease the burden in terms of your bills, and you can focus on trading while being patient. Lastly, be open-minded and adapt to what the markets are telling you. So that's it for this video, guys. I hope it assists you in your journey to becoming a profitable and successful trader in the long term. Otherwise, I'll see you next time, guys. Peace out.